All right, traders, Sam here from TradeDevils.com and TradeDevils-Indicators.com. Today we are looking at the latest addition to our lineup of tools and indicators. That's the Trade Devils Volume Zone Oscillator. Now I have in front of us here, this is the October crude chart. This is a 377 tick chart. And then on the chart here, as I always do, I have our initial balance indicator just to kind of frame up the day. I have our toolbar up here as I'll occasionally grab some of these tools, and then down below here's the volume zone oscillator. Now the volume zone oscillator, it's been around since 2009. So I think it's really an underappreciated indicator. Now it's available in the majority of TA packages that you might find. In fact, Ninja has a very rudimentary version of it built into the native to Ninja. So if you wanted to do a little experimenting, you could certainly start there. Of course, you could always demo and do a trial of ours as well. I think what you'll find is that in the Ninja version, it's very rudimentary and it doesn't give you access to any of the parameters. And we'll take a look at ours in just a moment. But that I think if you were doing any back testing or optimization, or if you were looking for ways to fine tune it without access to those parameters, I think you might find it very limiting. Now here I'm just working with default settings, and the VZO at its core, just the basic essence of what it is, we have two volume moving averages, a fast and a short, and then it's put into the form. Well, here, in fact, as a matter of fact, here, let me just take you over to the formula. So if you were to Google the VZO, Investopedia would be one of the first things you'd come up. But here's the formula, and you can see the two EMAs, and then additionally there is an ADX that's built into it. So the default here, and we'll look at this in just a moment. You've got a 14-period ADX here that's used to help identify trend. So a reading over 18 would give you indication that you're trending. As a matter of fact, if you looked at the color coding that we're using, when we're red, green, or in between, when we get over 18, then we go into that green or we go into red, whether it's downtrend or uptrend. And then we have the very neutral center period, right? Obviously. Something like this where you're not getting any benefit here. Really, you're just going sideways. So there's no tell here from volume as to whether or not this is an area you want to be trading. If anything, I would tell you that would be an area to be cautious about entering the market. But what you'll note here is because of the way the indicator is structured such that we have an oscillation, we get into these, I don't like these terms, but overbought, oversold, but because that's common trading nomenclature, we'll go ahead and use that here. So when we get into these minus 40, minus 60 zones, it's a bit of a tell that potentially market is a bit overdone. We use it that way. Now it's not something that you can use just on purely on the basis of the fact that, hey, I'm at a minus 40 here, so I better be looking to be a buyer. I find that where this is really most helpful is if you were making an evaluation. So here we just look at this, and here I'm recording this on Tuesday the 7th here, so this is the most current date I can put in front of you here. So we have just a perfect trendless day here in crude. So note the initial balance frames the day, right? So trendless, we don't go anywhere, we just go sideways, and we finish the day pretty much essentially where we opened. But note here, when we get to some of these extremes, when we get up to some of these this upper zone here, this green zone here between 40 and 60, there is a very strong correlation between the volume getting up here and these pivots. Or in this case right here, where you'll note as we have this kind of sideways here, it's almost trendless. If you were evaluating this, so perhaps you were looking at this as a trend with a location where you might anticipate a reversal. Here we know this is a reversal zone where algorithms are active, 50 to the golden zone. So if you're evaluating here, the one thing that you might deduce from this is with the failure of the buyers to push up into this again, I'm into this zone up here between 40 and 60. I just don't like to use overbought because we can stay down here or we can stay up here for extended periods of time. But if we get into this warning zone, how about I look at it that way? If we get up into this zone, what it's telling you is the failure of buyers to maintain control here. The fact that we start to roll over out of that would be something that would be part of the decision-making criteria. So even if I just put something simple, like just put a channel on this, as we push down and break the channel, so note what's happening here. Perhaps I'll get that out of here. as we break this, we break the center line. Now you'll note the center line, the 0 line, is important, much like the 50 in the 50 level in an RSI. When we break and we can't push any higher and then we push down, we know that we have a trending here and we know sellers are in control. And you'll see that's perfectly reflected as we move in this direction in line with what the VZO is implying. Now note, we get all the way down to minus 60, damn near to the tick, and that's where we get the reaction. Now that doesn't mean that the low is in, certainly, but for that move, the fact that we push back up, I mean, the market is talking to you here, right? So sellers were not able to continue to drive that lower, and we get the retrace. Well, I mean, this is what the market does, right? So we just get a classic swing and retrace. Right now, as you're right here, and we look at the VZO here, the fact that we can't cross the 0 line would give you yet again another tell. And here, let's just do the same thing, right? It's just standard retracement trading. We get here, now we don't quite make the 50. That fact that we can't get across the center line would tell you additional weakness would be something to anticipate here. Or again, if you were using this in conjunction with some sort of momentum indicator, and we'll look at it in just a minute or two with an RSI, the failure to push back up here, the market is talking to you, weakness, and sellers drive it down. Right now, note here, when we get back down here, so this is a good example here. So you can't, just because we get into this zone here of minus 40 to minus 60 and pop out of it, that's not necessarily a buying signal. This is just a heads up here that clearly sellers have been in control, and you're here, you're at a location where you might be looking for some sort of a reaction, right? Those of you that have looked at some of our videos, and if you haven't looked at the initial balance video, I would encourage you to look at it, because here's an absolute textbook case of it today, where you have the first test of the initial balance high, right? So the initial balance is set at 10 in crude. Here's the first test of it, right? Goes all the way to the lower end, right? Here's the first test of the IB low, right? If you don't understand what I'm saying there, or this is not something you're familiar with, I would encourage you to go back and look at the initial balance indicator. This is some of the easiest money on the board every single day. But you'll note here, as we hit this, and you're anticipating two things. One, you've got a measured move that's getting to its target here. The larger one out of this zone here, it's hitting its target down here. We're at the IB low. We know there's a high probability that there's an algorithm there that will fade that first test, and then look where the VZO is. Right, so you've got a confluence here, right, that might help you in that decision-making process. So interesting day. So we go from the first test here, we're about the middle, and then we go down first test of the low, we go back to the middle, to the IB mid-range. Right. Again, the other thing that you can look for with this indicator is it's particularly well suited to looking for areas of either hidden or classic divergence. So, we don't get perfect divergence here because this is slightly lower here. But note here, as we double bottom here in the indicator, we've got a pronounced new low here, and the market is already starting to rally. So same thing here. As we come up here, we double top here in the VZO, but then we head back down, and essentially we get a double bottom here. So this actually, you do have some divergence here. Oh, let me see here. So this being pretty extreme, actually, pretty good case here. And then you'll note here we just have slight, it's very slight, but it's there. So we get a little bit of divergence here. The indicator not going as far, and then look at the reaction. We go from the minus 60 zone all the way up into the 40 to plus 60 zone here on this swing up. So you can see the buyers and sellers are tracking. I mean, essentially, we can use this. What are buyers? What are sellers doing? How aggressive are they? Can we get past the midline? Right. Early in the day, here's pause, pause, pause. Now we push up. Now as we go green, that means the ADX is over 18 and we're pushing higher, but we can't do you note here, we can't get up into the overbought zone here. At no point can we get into that zone that we did early in the pre-market. So this is a bit of a tell, right? If the market was as strong as it would appear on the chart, why can't I get the buyers? Why doesn't the volume support that? So this just might be a kind of a tell as to a heads up here. Something doesn't look right here. If we've got this raging, well, in this case, it could very well be interpreted as an impulse. If we've got this impulsive move up here that's being tested again, now here again we are testing the IB high, and we can't get there, and we can't even get into the plus 40, 60 zone. Market's talking to you. All right, so why? I mean, if we're bullish on the day and we're going to rip here, why can't we get up into this? I'm going to have to use it, to this overbought zone. I just hate to use that term. But if we're going to get up into this, well, let's call it the green zone. Okay, if we can't get up into the green zone, why? Something's not right. Right, and then what comes off of that, right? First test. I mean, in crude, that's a hell of a trade, right? That's, I'm assuming you're not going to get the whole thing, but that's 56 ticks, right? Even if you took it to the obvious support here, to the open, well, that's 42 ticks, right? It's not a bad little day trade, right? 2-3 contracts, nice move. Now we get chop in the middle of the day, right? Is that reflected here, right? This is pretty classic, right? So we get middle of the day chop. Now one more last push down here. We get into the red zone here. Push, can't get up, can't get over the zero line. Push again, can't get over the zero line. Back down. Now I've got a little divergence. Now as I rip all the way up here, I go in a straight line. Looks like it goes up. It looks like it damn near matches that, right? We go up, we get here 50 ticks. It actually goes 56, right? So this move and this move, this move and this move almost identical, right? Nice. Now, and this time, note the difference. Now we get to the zero line and we push through. We've got trend. The ADX is above 18. We color green. We go into the green zone up here, but we can't hold it. So you might have been looking at that thinking, oh, okay, well I've got an impulsive move here. I've got a very modest retrace here, and perhaps we're going to kick again. But you see, it doesn't show it here, right? So buyers are giving up here, right? Sellers take over. We break the zero line, down we go. Now we're in the red zone. We just stall at 40, up, right? So it really can be useful, and just as something that very few traders are looking at. It's just another way to look at volume. So I would encourage you to consider this as a complement to your momentum tools, right? And particularly if you're not using any volume, this can be a useful way to interpret it rather than just trying to read the volume bars. Or well, you've got choices with how you want to look at volume. This is just another one. I like using it on tick charts here, but I like to use it in conjunction with momentum indicators. Now, before we get into that, let's pause for a second and let's go look at the parameters that are available to you. So stand by and we'll take a look at that. All right, well, now I've opened up the indicator here. You can see the volume zone oscillator here. Now, these are the parameters that you have control over. So obviously, the VZO period, you choose whatever you like here. The ADX period, whatever you'd like. The threshold, whatever you'd like. These are the defaults. And then there's a longer-term EMA here if you were using this on, 15 or a 60-minute, which I would encourage you to consider. There's an additional EMA in here that's going to help with identification of trend. If you're a day trader, that 60 will be less relevant, so you might consider reducing that EMA period. But again, it's up to the individual, and do some experimentation with it as you like. Additionally, we have the capability of getting an alert here, so that's an option for you if you want to be notified when you get into these zones. Right? None of this is available in the native version of Ninja. You just get the one default. You have no access to an alert, no access to any of these colors, and you just get a very simple version of this indicator. So we've turbocharged this a bit because we think it's a useful tool. I use it now on all of my tick charts. I think it's really helpful, and this is essentially what I asked my partner, my programmer, to work out for us so that we could use this in conjunction with some other tools. I think it's a great add-on. And you'll find it, I think, very useful, but I would certainly encourage you to do the 5-day trial and start working with it, right? Do some experimentation, particularly if you're back testing and looking for the best combination here. That can be really worthwhile if you really start to see the potential of it here. And again, color choices and color coding to your heart's content, however you'd like to set it up. I would encourage you to always keep the zero line active, and then here are the default here colors, etc. Right? So this is pretty standard of Ninja indicators, but much more control over what you're looking at than what you would find in the native version. Right? So we think this is really a nice add-on to a momentum tool. So for example, I have it over here loaded with just the default RSI that comes native to Ninja. Now here you can see it as we look at this, and particularly much like interpreting the RSI. Right? So most people will tell you the best. Well, let me rephrase that. One of the most beneficial ways to interpret the I want an arrow here. The the RSI is when we break either below 50 and we head towards, in this case, minus 30, we would signify that we have trend strength heading lower, and then when we break above 50 and we're pushing this direction, we have trend strength heading higher, rather than just interpret overbought, oversold, which is how most people use it. Now, that being said, take note of the fact here that while we certainly would want to be aware of getting to these extremes in the RSI, we'll note how the volume tends to match the RSI. So you have volume and momentum in alignment. So if you were up here, what I would tell you is this: if you were up here and you had the VZO in the green zone here and the RSI pushing over 70 and now starting to turn over, this might be what you would consider a higher risk location to be entering along. It's not necessarily telling you short the market. But if there was something else in addition to support that decision that you were interested in shorting, as we come out of that green zone, little retrace doesn't go back up, just is matching price. Same thing with the RSI. You can see how this could be beneficial to you, particularly at these extremes. So I would encourage you to consider here. We see this is even pre-market here. We swing right here. So here's the open. Now first thing we do is we come down into the red zone here, the VZO. So sellers take it down, but we don't get the RSI into that negative 30 and below zone here. So signs of potentially some strength. Now well, here this is a good example here. As we get up here, the RSI goes over 70 here, but the market has more legs in it. So note here, well, something's not right here. So we get the RSI is failing to get back up to 70, so we have a lack of trend here. VZO can't get into this upper zone here, this 40 to 60, and we're tapping the IB for the first time, which we know is a heads up. Right? Look to nothing more than to look for a reaction here. Right, that's about 10, 20. So we know it's the first test. Again, 56 ticks come off. And as we come down, this little swing right here causes a pretty good reaction in the VZO, very modest reaction in the RSI. So I think that gives you some ideas of how you would incorporate. I can show it to you. Oh, no, that's not it. Here's how I use it here. So this is a template that I use very often. Here's just the S&P. So I have a cumulative delta. This is our cumulative delta. This is our devil's edge, and then I get the VZO down here. So if I'm looking for, I want confluence between all of this. So this low. So here's a great example, right? We're breaking through these are McGinley's, right? So we're breaking through this. The cumulative delta is nice separation from the moving average. Here we go lower. Devil's edge goes red. We come out of a squeeze, and now the VZO all red. But where do we bottom, right? Right into the 40 to the red zone here. We put in a double bottom here in volume. Now push back up. Now we're heading all the way back up towards the green zone. But note, even at the end of the day, there's a lack of conviction amongst buyers, as in they're not taking it up into the green zone. So even though we're trending higher, I mean, that's a fantastic move. You don't really see any situation here where you would consider it overbought or into the green zone, which would be a heads up. So if you got up into the green zone, if you set the alert, that might fire to say, hey, heads up, perhaps we're getting overdone. Just like the alert would fire here, perhaps we're getting oversold here. So you see, right, this is the first test of the IB low. Right, that's at 1114. Actually, it comes a few ticks shy of it. So I would encourage you to look at it as a nice tool to incorporate volume, particularly advantageous to work with a momentum indicator. So you're looking for that confluence, right? Does the volume support what you're seeing in momentum? And in this case, as we see it today, often this can be a tell as to what's happening with the volume. All right, so there you go. Again, as is always the case with our indicators, a full trial for 5 days. That's 5 trading days, not calendar days. I'd encourage you to plug it into one of your templates where you've got a momentum indicator and you're looking at incorporating some volume. I think you'll find it very useful. All right, with that, wish you guys success in your trading, and feel free if you have questions, and don't forget, I would encourage you to give it a spin with the trial. Okay guys, talk to you later.